Hello YouTube! Today the S&P gapped and it looks like there is a trap. This is a little bit different because when we look over to the previous period where we coiled up like a spring and then went down, we left two gaps on the chart. We left one here and we left one here. And now as we look over to the right-hand side, what we want to ask ourselves is, are we exhibiting similar behavior? And what I was trying to point out for the last couple of days is that we're coiling up and now we launched up. We're launching up, not launched up. And what's really important is that we've now filled one of the gaps and we actually bounced off of there, which is what we would expect if the market is truly bullish. And the reason why I think it's really important for us to pay attention to the gaps is because as we look here, there was massive volume to confirm this gap. So when we look to these two holes here, we note that there is corresponding massive volume. That means that the volume confirms the move. And if the volume confirms the move, it becomes more valid. When we look to the move over on this side, the volume is still decreasing, which means that this is a reluctant rally or a wall of worry rally. And the reason why we see that is because there's just not the conviction or these massive green bars to convince me that people love this rally and they're buying into it. So as I'm looking here, it kind of makes sense that we fill the hole and we bounce. And the big question is, are we going to hold here? Or are we now going to go down and actually fill this lower one? We could go down to as low as roughly 412.75. However, what's really important to note is that as we zoom in, we note that I don't know that we really have to fill this hole. And that's because when we look over here to our August 8th high, there is now going to be only a one-day gap. So technically, we're always looking for the previous session to get filled. But when we look back here to, again, to the bottom, there's still a gap on the bottom here. So let's pretend that the coil springed up and now it's launching for the bull case. That's what we want to watch for. We want to make sure that we stage a daily higher low tomorrow, which is going to be 419.22 or higher. And that's going to be really important because as we look over here to our weekly chart, let's just pull up the weekly chart here. We note that as we're looking into the close of the week, we just want to know, are we going to be doing anything bullish or anything bearish? If we close at 419, 419, yeah, 419, sorry, I probably misspoke before. That is above all of our previous tops, and that is above the monthly, the weekly lows, monthly highs, and for me, that's pretty bullish. And we know we already have a spinning top, so I would say that the move next week is going to be very telling because as of right now, we're still rocking this very acute or sharp uptrend. And we could meet the 50 moving average here pretty soon. This would land here on August 29th, which would be what? The end of the month. And we know that we're already looking for that psychology chart on the SPY to fulfill being bullish. And as we look here, oh my goodness, right? Oh yeah. If it went up to, what was the level we were just looking at? Yeah, the 50 weekly. 50 weekly's at 433. That would be pretty bullish. That would be a higher high, and that'd be a bull pivot. It could leave us room to potentially backtest in September or not. All right, now let's talk about the bear case. The bear case is that we're going to go down for a lower gap fill tomorrow. We're going to go and fill this whole hole. And there's a few articles which are actually a very good time for us to assess, not tell the market what it's doing, but assess. We look at the news articles that come out and we look at how the market reacted. So today we we closed at 419.99. Oh, it must be a market on close day. Yep, we closed exactly 0.00. One thing I do want to note just before I go forward is that I've been noticing that SPY and QQQ have been moving back in unison with roughly a 4-point difference. So when we look here, we get 420 on SPY and 324 on QQQ. So this seems really important to me because, again, there's a 100-point difference, but what's been largely talked about for what went lower into the last month is also what's rallying back up, which means if we think about that, they're forming cup and handle patterns. And now, if we're going to, again, fill that lower gap, it means we're probably going to go down. However, if we decide to do a cup and handle where we're now going to leg up, that is a bull break. That, by definition, is how we go higher. So if you think about the weakest stocks are the ones that snapped us to here. But now, S&P is actually getting some breadth. Why? Well, it closed flat. QQQ was red. So SPY was greener on the day. QQQ was more red on the day, and it was not actually performing as well. So if you look at the one-day performance, energy's back in play. Interesting. Finance is back in play. That seems interesting too. Product manufacturing, and consumer services. So looks like we're going into a little bit of a risk-off trade. Is there a trap being set? Again, the gap in trap, or is it a gap in crap? Let me know what you think. And we're going to look forward to the next section here. So again, thinking about those news articles that we got and whether or not they actually move the market. So if I told you, hey, we had a massive gap, we had a second gap, just like we did before, one gap, two gap, and then over on this side, we had one gap, two gap. So again, when we're talking about our monthly chart, let's go back one more, where we have these two boxes. These two boxes are what we're looking at on the daily chart here. So this box right here and this box right here. And it's a little bit annoying having to delete all these lines because TradingView is giving me grief still lately. So I'm just going to skip forward. And now as we look forward here to the section where we have, again, we have the coil getting tight, and then boom, shoots down. On the same side here, coil gets tight, and then shoots up. So regardless of news articles, I would have expected this type of move because, like I said, there's a volume drop-off, and there's just not the conviction that we are going to continue to go. The telltale sign we were going to go higher yesterday was a close at the high of the day. So we exhausted, and this might be an exhaustion gap. So again, gap in trap or gap in crap. I don't know. Drop me a comment and let me know what you think. So let's go through these articles, and these are what came through in order. Fed leaders unswayed by softer CPI, sees rate hikes in 2023. Right now, the market is priced in for cuts in 2023. So right now, we're expecting 50 in September, 25 in November, 25 in December, and that is it. We're at the terminal rate. So we talked about this yesterday, so I'm not going to beat the dead horse, but there's an article that came out, again, published on August 10th, yesterday morning, that was recycled and updated. So that's interesting. And then that's a bearish, right? So then we also had, right, AG, right, set to blah, blah, blah. I don't want to read it. You can, right, performing an R word on the former president. And I don't know what it's going to turn into, but usually they don't do anything like this unless there's merit. And that is when the market took a notable leg down today. So if we look at ES, we look on the 1 hour chart, we note that, oh, that 42.12 we were talking about before. We hit 42.60, which is 425 on SPY. That's the monthly low on ES, came all the way back down to 4212, and right now we are digesting it. So part of this move could be technical, part of the move could just be that headline risk, and also just option smoothing out, again, from 425 back down to 420. That's just them smoothing out the options for tomorrow. And once we lost the VWAP, the notable move here was that we dead cat bounced and then rejected. So what it looks like to me, again, I'm trying to keep an open mind, but this kind of looks like an inverse, like a head and shoulders here, where we're still throttling 4212, which is going to be 410 on SPY, but I don't know, it's kind of hard to ignore this, where the right shoulder is not perfect, but when we look at how it acted around the VWAP, lost the VWAP, dead cat bounced to the VWAP, tried to reclaim the VWAP, and then power slam. So right inside of here is where we got that news release that I just showed. And then the last thing we got, which was actually bullish, we got this one here. So CDC eases, again, certain word guidance as, you know what, now poses lower risk on severe illness. I don't want to read the words just because YouTube doesn't like it. But anyways, when we were looking at the heat map yesterday, I kind of said, well, maybe we also have peak virus. Why? Well, as we look here to the healthcare sector, we note that we got all of the drug manufacturers red. That's the theme. Everything else is green over the last 30 days, basically. This is a theme here. And I hope that this is the peak. So net, if you would have told me that S&P would have closed unchanged to the cent after the day from yesterday, I would have said, that's bullish. And we got two more things to worry about after the wall of worry from yesterday and one positive headline. So that tells me that, well, let's stop using our brains to try to be so smart because we have emotions. Let's look at the fear and greed index. Oh, it's at 53. It ticked up. That's correct. It was at 54 earlier today, and it's just a whisker getting into greed, which would mean what? Risk on. That's what risk on means. It means people are getting greedy. So 2 more points, and we're in risk on. So a 5% move, or it was 54th of open. So if it goes to 55, we're now into greed, and this thing can start to drag us up. And next thing I just want to look at here as we wrap up is just maybe a few more things, actually. I want to look at the dollar, just because it's really notable that it's coming back down to its previous, again, supply zone where people were selling. We have our golden cross. We power slammed off 106.56. That is beautiful because as we zoom out to the 1980s, we note that that was a really important area here. So the fact that we're rejecting off that, that's notable. We need the dollar to come down if stocks are going to continue to go up. and this massive move below the 50 DMA starts to get me a little bit more bullish. So we can also know we got like a doji on the daily. We are below the 50, which means if we continue to fade down, that'll be supportive for US stocks. Next thing is just that there is still a warning being flashed. Hard to ignore it. The 10-year Treasury note is now up by 4% on the day, almost 289, approaching that 3% threshold. And it wants to start going. That's what it looks like. It wants to start going going up. It looks like it's forming a cup with a handle. And if it can reconfirm by getting back above the high, as I noted before, that's a breakout. What does this tell you? Maybe we're not at peak inflation, because this is what people expect inflation is going to be at for 10 years, not 2 years, like we look at on the 2-year note. So if we form a higher high, that means that, oh boy, we're probably going to be in trouble. And the 10-year being up this violently explains the reason why QQQ would be down. Because again, technology stocks are generally going to be unprofitable. And as the cost of borrowing becomes more expensive, the unprofitable companies have a harder time staying afloat. Last thing I want to look at here is going to be QQQ. Then we'll circle back to SPY and we'll wrap it up. VIX ticked back above 22 and whatever, right? Had a huge move lower yesterday. The same thing I'm noticing on a lot of other charts is happening on the NASDAQ. So I've noted these areas before. We got 32314, which we closed above again today, actually. I don't know what just happened. We have 32408. So technically, we still close above the bull market territory. We're still negative 20 off the top, though. So that negative 20 off the top is going to be the blue number, and that is going to be 326.97. And our high of the day, 330.36. What does that mean? We price discovered above, out of bear market territory in a new bull market, and we printed a higher high and a higher low. So the same note I mentioned on SPY last week would be into the Friday close or the weekend close on QQQ, if we can close above last week's high at 324.72, or basically 325, which is where we are right now in after hours. That's bullish. Why? We price discovered to a new range. We have continuation with higher lows and higher highs. The volume does stink. Cannot ignore that though. Volume is stinky. And we note that same kind of area where we have to digest the liquidity that we did before. And in a current low liquidity environment, it is getting, the moves are becoming exaggerated or emphasized. And that's just because this similar size order in a low liquidity environment or the summer would mean that it could have a more dramatic move on the tape. So this area right here, what did we do? We're punching above it, we're digesting it, and we are nicely above last week's high. So that is it. If you want to know more, I encourage you to watch our weekend deep dive. And for tomorrow, we will have that draw prepared. I apologize, we did not have that ready for the stream today as I hit record, and I did not want to redo it. Otherwise, please watch our weekend deep dive or tune in tomorrow at 3 p.m. Eastern for our Friday live stream. Thank you for watching. Look forward to seeing you tomorrow.